Hello everyone. Today I'll be going over some markets, and I also want to go into covering gold because there was something that's really important that explains why gold initially, as it was uptrending, it broke. So why did it break and take out multiple lows? Why did it do that? And what were the early warning signs? And then I'll introduce something else. So on this screen, I have multiple markets. E-mini, the top row is daily charts, S&P, oil, gold, and Bitcoin. And then below is just some lower time frame tick-based charts that can be used like just like lower time frames, with the daily being the higher time frame. So what I wanted to do was explain gold, and I'm going to make that chart a little bigger while I explain it. So on this chart we have gold. You see rally and rally and rally and rally and rally and rally, and then you had this break right here. This break is pretty significant because it's the biggest volume in 20 down waves. The biggest volume in 20 down waves. So the down volume is the biggest volume in 20 down waves, and it took out this low, and I mean, it's pretty significant. So I was wondering, why did it do that? And what were the indications? What were some of the indications? So we'll just take a look at from this point onwards, all right? And we see we'll take a look at momentum. We'll take a look at volume, wave volume, and the COT. So this wave here has this rally. She says RLY is rally. So rallies, you have momentum above the prior momentum high, or right here. So this is increasing momentum, increasing volume, and you had the funds buying. They bought 27,000. I think it's 27 times 100,000, if I'm not mistaken. I think it's 27 times 100,000 contracts, and these are futures positions. So the funds are buying, right? So why is that important? Because prices go higher and lower based on whether the funds are buying, or other major groups. Basically, those who have that interest in making money off of price movement based. So the funds are buying. All right, funds are buying. They're creating the rallies. All right. So we have 27. Very good. Then market pulls back. It pulls back here. We see that momentum is still good. There's some selling, volume selling right here. We take a look at wave volume. We notice the up waves are bigger than the down waves. Very, very, very important. In almost all cases, when you have this pattern of high volume, low volume, and it keeps on going. See, I mean, you have over here 13, then 9, and 7 and 7. So you can just visualize that the volume is bullish, right? I mean, I can see it clearly. like a no-brainer. Even here, 31,544, 10, 9, 6, 5. It's like, it's not that hard. When does it change from downtrend to uptrend? When the up wave is bigger than the down wave, it changes. Boom. Anyway, so where am I? So here, you know, after this, we have 14,000. 3,000 down. So this is the dominant buying, right? The dominant buying right here. Before it was 13,000. That made the rally. It was 14,000. So do you see you know, any lack of demand? Obviously not. And the buyers are dominant. Why? Up waves are bigger than down waves. Done. More volume in the up waves, less volume in the down waves. Same with the COT. All right, and you still have demand come in here. 27 times 100,000. You know, it's still there, still there, it's still there. And then again, you have here 18,000, and then, you know, only 9,000 on the pullback. So what is this telling me? It's telling me that buyers are winning, and you know, it's going to keep on going up. Excuse me. All right. But here, something changed here. If you notice, in terms of momentum, we have momentum. In terms of volume, we have volume. You have 14, and then 18, and then 20. But the only thing that gave you an indication that something wasn't right was here, the COT. It's not confirming. Meaning the fund, you know, before they bought 27 times 100,000, then another 27 times 100,000 on the rallies. I want to see spikes. So the spikes in the rallies, spikes in the rally, because the spike is explaining the rally. It's the cause of the rally. It's why the market is rallying, because there's buying. Again, the rally, spike. But this rally has no COT volume. So this is the problem. This is the only indication I saw that explains the market, why the market pulled back, is because there's no, you know, the funds are not buying. 5 and 6. Is there any spike in the rally? Is there any big green in the rally? No. So that's the problem. This was the only indication that we had that this rally, there's something not quite right with it. This rally, spike. This rally, spike. This rally, spike. Okay, what about this one? This rally, spike. All right, what about this one? That's some spiking here. This rally, spike. See? Almost every rally has a significant spike. Even this one here, it has some. This one had a lot. You know, 54, 11, which is greater than 7. You know, this one had 18. This one had 27, 27, 26. This one had nothing. And what's interesting is the red is minus 20 is bigger, more selling than buying. You see? So when the market pulled back, it pulled back on minus 20. When it went up on 5 and 6. So the selling is more than the buying. So I mean this is the only indication I see where the net change, the COT showed selling, and then after that no buying as the market rallied, and then what happened? The selling, price went down and rallied down, right? And now here you have 10, 12, 18, 10. So I would consider the 18 the spike within that down rally, right? The heavy selling within the down rally. Now, what's interesting is that on the way up, the buyers are back. Right here. 24. See? So, as gold pulled back, someone bought it. The funds bought it. That's the data doesn't lie. 27 here, 27 here, 26 here, nothing here. Price pulls back. Then 24 right here. Now it's in this second up wave. We have we don't have a big spike, but still buying activity, and that explains this, this move, right? Now what I'm looking for is a spike down, because if there's no spike down, then it's all out of whack, and the buyers would have control if this, whenever the report comes out, if it's low, right? Because look, in every case you have more demand, more add, less selling, more add, less this. The buyers are always in control. Here, the sellers took control on this 20 because of the weak buying response of 5 and 6, and they sold it some more. But then after that, the buyer stepped in, buying 24 times 100,000, which is bigger than all of these 1, 2, 3, 4 net changes in COT. So buyers are back in control. If they weaken, I want to see a selling spike. Otherwise, the buyers are going to, keep the buying more than selling. Probably continue the uptrend. Anyway, I'm just reading this because to me it's just like volume. And if you can read volume, look at this. 25.5. Obviously, buyers are in control. 31. What do we get on the selling? 5 and 4. Obviously, buyers are in control. 10, 9. Oh, buyers are in control, but selling is still heavy. Until this point where selling dries up, it's only 5. Buyers take control here, 13, pulled back on 9 and 7. What's the biggest number? 13. Here is 14, and then 3 and 6. Who's stronger? Buyers. Why? 14 is bigger than 3 and 6. Then 18. 18 is double 9. Then 20. After that, 18 here, but this is heavy selling. It's bigger than all of the prior selling. And the response is 10 and 10. You see? 18 down, pull back in 10, pull back in 10. So according to the volume, the sellers are in control. They have the biggest number. Anyway, so I'm taking a look at this data here and reading it similar to volume. I think it makes a lot of sense. If you have a rally, it should have a spike. Why? Because the spike would explain the rally, because the spike is just buying, and the buying explains the price movement. All right, everybody, take care. There's one other thing I wanted to show. This thing is getting really interesting. Why? This is crude, and it's getting really, really interesting to me. One major reason is there's a lot of cause, right? The second major reason is someone loaded the boat right here. This is, look at the COT on November 5th, when it came out on November 5th. Look at how much they added. Look at the net change. 55 times 100,000. That's the biggest net change in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. On the chart, that's the biggest net change. Who's buying this? And why? You see, something's up. Right here. Did I do this right? Right here. See that? Something's up. So my take on it is, I mean, I don't really give a shit. Yeah, you know, if it breaks out, you know, it's in, you know, long. There's two-sided trade like crazy here, you know, in the range, but to me it looks like someone loaded the boat here, and it's getting ready to break out. And there's a change of behavior here. I didn't really check it, but this is the buying activity right here. There's some buying activity here. Then it made that higher high. After that, it went into range. So I'm not really 100% sure what's going on because of this range is very choppy. But this sticks out like a sore thumb. So again, check 5th of November, and see what's going on. All right. So either the sellers are going to attempt again and dry up, or the buyers are going to step in. There's all of these highs that are ready to be taken, but at the same time, there are all these lows ready to be taken as well. In any case, that's what I wanted to show. Have a good weekend, and happy holidays. Bye.